Are we about to see $125 to $714 silver in repeat of 1970s bull market? So could we see $125 to $714 silver in a repeat of a 1970s style bull market? Well, let's cut to an audio from Grant's Current Yield podcast. That's Jim Grant with Lee Goering from Goering and Rosenschwag.
Lee and Adam, much to my initial disapproval, but then subsequently to my great admiration for their call, said that gold is latent. It's not the moment. And they said this a couple of years ago, and gold has been indeed singular in its lack of response to the apparent stimuli that have made so many of the other commodities markets move. So where do we stand now in gold and silver? What's your view?
One of the reasons we decided to step back from the gold market in the summer of 2000 is the gold market did something
in the summer of 2020.
2020. Sorry, getting all these decades mixed up.
They do rush by.
They do rush by, don't they? That something happened in the summer of 2020, which has only happened a couple times since gold was really freely traded. That was started basically in 1971, and that's silver, which there's a belief that silver leads a really good bull market, and that's not true at all. Every bull market in gold starting in 1971, silver lags. And then silver lags, and then after lagging and lagging and lagging, it makes a furious catch-up move. And after it makes that furious catch-up move, either the gold bull market goes through a lengthy period of consolidation or an outright bear market. And I think the way to look at it now is that the consolidation phase is very similar to the silver catch-up move and following consolidation period that happened in 73, 74. And so silver staged a furious catch-up rally starting in April of 2020, finished in July or August. Gold's been correcting sideways ever since. There is a massive gold bull market in front of us. And we're on record, we think gold is going to go somewhere, easily go for between 10 and 12,000. And that Forbes article, which I said to you before I came here, gold was 275, and I said it's going to hit 2,500. We got pretty close, 1,900. And you use the same type of valuation parameters. You can easily get 10,000. You can get 15,000, maybe even more. So it's a huge bull market.
It's settled for like 2,000.
Yeah. But the question, when is it going to be?
Yeah.
And the question is that I think that when the Fed begins to raise rates, gold will pull back, and that will be your buying opportunity. I think that will be the final. And if you really want to get down into the technical weeds, the last bottom in gold was made in August of 2018, when gold speculators went net short and gold commercials went net long on the market for the first time, 2001.
Lee, if we just have to wait for the Fed to raise rates, again, we're recording this on March 9th. I believe the Fed meets next week.
Yeah.
So do we just wait for 7 days? I think by the time the podcast comes out, it may actually...
You were saying that when the Fed begins to raise rates, gold goes down?
Yeah, I think it will. Similar to what it did, again, using the...
It doesn't matter that the Taylor rule would prescribe a 9.55% funds rate, and it would take 38 1/4 point. Well, you have to wait for 38 quarter point raises to get bullish again?
Well, I think that it's things like the Taylor rule, which that's why gold has to be priced at $15,000 an ounce. We're so far away. And it's just that when the Fed raises rates, there'll be this knee-jerk reaction from people to sell gold, and that will be the buying opportunity. Just a gut feel, because I don't know when this...
But what if the Fed, having announced that it's going to raise rates not once but several times, not 38 times, but say 6 or 8, what if the Fed, on reconsideration, decides that the world is very, very tough place, and we mustn't, you can write the speech for Chairman Powell. What happens if the Fed gives the big flinch? What then? That
would maybe the time to say, okay, the correction phase is over and buy in. If gold's up $100 and the Fed says we're not going to raise rates, then you should just follow it and buy into that strength.
So if Lee's right, and we're right in the middle of that 1973-74 period where silver, as you can see from this chart, went up 144%, and we did see silver in 2020 go up from just under $12 to almost $30. So it had that big run up, and then it's since consolidated. But if it's true and we're going to see a 1970s style bull market in the metals again, there are a lot of similarities to the 70s, a lot of things that are very different as well, mind you, but we do have a energy crisis. We had an energy crisis in the 70s. We've got a CPI problem. We had a CPI problem back then as well. And if he's correct and we do see this 1970s style bull market ahead in gold and silver, we still got several years to wait, because it wasn't until really that 1979 into 1980 period where we saw that real big spike up in silver. So I love this chart, and it's a good comparison of silver today versus silver during that mid-1970s period. So, if we are in that 74 period, then, we're going sideways in the silver market for the next couple of years. But then we ultimately get that really big spike up, and that doesn't matter what happens to interest rates. We'll come to interest rates in a second. But when people start to lose faith, and you got to remember, I think it was in the 78 when we had the Carter bonds. So people were losing faith in the US dollar at that point. Now, could the US with their sanctions actually force sovereigns to de-dollarize and to move into assets that don't have counterparty risk, where your assets can just be gone? Well, what would that be? That'd be gold, right? So we could see something similar. Maybe we don't have to wait as long. Maybe if we are in around that 1974 period, maybe we don't need to wait another 5 years to see a 1150% gain like we did in the 1970s. Maybe this happens a lot faster than we expect. So as I said, we've got some similarities to the 1970s with negative real yields, and really these are the deepest negative real yields we've seen in a long, long time. And so we may see, as Lee said, that we may see a pullback in the metals as rates go up, and I think we've seen that. I think we've already seen that little pullback in the metals, from their highs a couple of weeks ago, and I think a lot of rate rises have been priced in. We might see a little bit more of a pullback from here, but raising rates doesn't mean that gold and silver do poorly. You can see from this chart that in the late 70s, when Volcker raised rates, we know gold and silver went up as interest rates were going up. Ultimately, Volcker broke the back of inflation, and then confidence came back to the US dollar. And when that confidence came back, people didn't need to hold on to their gold and silver for fear. People then were able to put money in a term deposit and get a very high rate of return. The stock market were at super cheap lows. Talking about 4 or 5 times earnings, and so people could buy in to stocks. So as rates rise, if this is a repeat of the 1970s bull market, then in the short term might pull back a little bit, but as people lose confidence in fiat currencies, that's where that's what pushes up the metals. That's what pushes up the metals, is when people lose confidence in currencies. And I don't know about you guys, but I'm definitely feeling that people are starting to become more worried. I'm seeing on mainstream where people are now talking about the sanctions and what they might actually backfire in terms of the US dollar being the reserve currency moving forward. and fiat currencies in general, with the debt bubble that we've got and with CPI out of control. We're seeing this in mainstream. I'm getting ordinary people that are now talking about gold and silver, meet up with friends who know nothing about gold and silver, all of a sudden now talking about gold and silver. I'm hearing bullion dealers have just got Perth Mint. I called Perth Mint yesterday, and they've got record amounts of inquiries, and I had to wait on hold for about 30 minutes before I could speak to somebody. So I'm getting that feeling that people are worried about where the world's moving to, the conflict that's happening, inflation, CPI, a shortage of things. People are losing confidence. So, we might not have to wait another 5 years to see that 1978, 79, 80 kind of really spike up. We might be not too far away from that. So where could we see the price of silver? Well, if Lee thinks that we're going to see gold easily, that's his words, easily past 10 to 12,000, maybe even 15,000. When we look at the gold-silver ratio, if we're looking at $10,000 gold, then we're looking at silver being somewhere between $125 and $714. We know the mining ratio is actually about 8 to 1. So even if we go to its 1980 low of 14, we're looking at $714. Now, I've been pretty open and honest on this channel that my price target is triple-digit silver, $100 plus silver. I think we're going to see somewhere between $100 and $200 silver by at the end of this cycle that we're in. But I don't measure my gold and silver in terms of dollars, because if we really get some crazy inflation, then that's really not the way to measure gold and silver. What we do measure our gold and silver in is other assets, in real goods and services. So, this is where wealth cycles becomes very powerful. And I've used it before. If you haven't seen my video, I share in a video, wealth cycles. I'll put a link in the description below, about my own personal journey of using wealth cycles, using silver, turning currency into silver, and then silver into rental properties, and rental properties back into gold and silver. And I'm playing it out all over again. So I had to share this this picture with you guys. We've got prosperity on the left, gold, bullion, and we've got ruin on the right, where, well, people want to hold on to their fiat currency. And yeah, so you guys decide what you would rather, gold and silver or fiat currency. Anyway, if you guys like this video, please hit that like button. Really do appreciate it. Love to see your thoughts and opinions in the comments below. Speak properly, Stephen. Also, guys, I'm hearing that many of you are getting having your notification bell switched off and being unsubscribed to this channel. So if you have subscribed to this channel and you notice that you're not getting all my videos, would you please just resubscribe, hit that notification bell so that you get all my videos when I upload them. But yeah, like the video, put a comment down below. Love to chat with you guys. Anyway, take care, and I'll see you all again on another episode of Finance Uncut.